Hi traders, and welcome to this quick video. My name is Marco Meyer from Trading Educators and AlgoStrats, and today I'm going to talk about one of the most common trading errors, something where a lot of traders go wrong, especially beginning traders, and that's to stop trading at the worst time. Now, what do I mean by that? And I'm talking about stopping trading when things don't go so well, whether it's with a specific trading method or a system you're trading. I see this over and over again where traders stop trading at the worst time possible they could stop trading, because that's usually when things actually turn around. So let's have a look at an example. Now what you can see here is the equity curve of the ambush trading method on natural gas, on the natural gas future contract. And you can see it from 2005 until today. And the curve goes up very nicely. And you might say, hey, but it's flattening out here at the top. What's going on there? And the reason why it's looking like it's flattening out here, but still going up, but much more slowly, is because this graph here is not adjusted to volatility. So I've kept it as simple as possible, just showing the dollar values on the left side. So this is measured in US dollars, traded per one contract all of the time. And this curve goes a little bit flat in this period because volatility goes down. So what you can see here is the average daily range of that contract plotted in US dollars. And in 2007, we had values up to $10,000. So natural gas moved $10,000 per day. While right now, or since basically 2011, it's more around $1,000 up to $2,000, which is about 1/10 of what we had back here. That's why you see this equity curve going up like crazy until 2011, and then it looks like it's going flat, but it's still going up. Now if we correct that measurement and instead of using US dollars, we measure the whole thing volatility adjusted, things look as they should again. The equity curve looks pretty much the same in 2007, 2008, and in 2011, 12, 13, and so on. So let's come back to what I wanted to talk about. What I've done here is I've zoomed into this equity curve. So here we have the equity curve starting 2015 until today. And what you can see in between are, we had some quite serious drawdowns in between, but nothing really unusual. Here we had another one. And what I want to talk about today is that it's times like this down here when I start getting emails about ambush. This is when I start getting emails from guys saying, hey, what's going on? Big drawdown. Should I stop trading? What should I do? And that's when a lot of traders actually do stop trading. So they stop trading right in the drawdowns after things didn't go well for a while. What I like to call the cycle of beginning traders, because what happens usually is that they start trading a method when things look good, like up here, for example. They want to start trading that method right away, jump into the market, and then they catch a drawdown right away. And then they stop trading the method when it's down here and would have started making money again. And a lot of time they switch the system then and then start trading something else. And what are they going to start trading? They're going to start trading a method that at this point in time here looks like ambush did right here. So they look at another method where things are just going crazily well, and then they start trading that method. Now guess what's going to happen there? Same thing over again. They're going to start losing money, and ambush is going to start making money again. Now why is that? And the reason is that every trading method depends on certain market conditions. So either market conditions are favorable for what you're doing or they are not. If they are favorable, you're going to make money. If they are not, you won't. These are cycles that come and go. So you might have trading methods that work well in periods of high volatility or in a trending environment, and you might have methods that are the opposite, that work well when the market's not trending well. And that's key to understand. If you don't understand that, you're going to make that same mistake again and again. You're going to stop trading a method at the worst time possible. The best time to start trading a method is when you know it's in a normal drawdown and the odds are high, it's going to stop soon. So I did two more plots here. Now this plot here shows us all the trades as a single trade. So here's a trade that made $500, here's a trade that lost $1,000, here's a trade that made $1,000, and so on. Now what you can see here is an average of each of these trades. So in this case, it took 10 trades, meaning this one here is the average of the last 10 trades. So when we look now at the equity curve, and this is the same time period you're looking at. So here's March, May, and so on. Now, if we look at March, for example, where we see the equity curve going up, of course, we also have a nice average trade. So this is about the same time, and you can see here we made about $300 per trade on average on the last 10 trades. Now, once the drawdown here starts and goes down and down and down, at the same time, our average trade goes down. And at this point here in May, we actually lose $200 per trade. This is where things start to go better again and where the average trade goes up. Here in June, we had another drawdown. Same thing happens. The average goes down. After this, it goes up again. Now remember that this is exactly when the beginning trader usually stops trading the method, right? And when things look very good, like up here, for example, you can see we also have reached an extreme value here. So we made about $300 on average on the last 10 trades. The last couple of times this happened, things started going worse again. And that's exactly when a beginning trader is going to get all excited and wants to start trading the method. So hopefully this is going to help you to deal better with drawdowns than before. And instead of jumping right to the next trading method system around the corner when things aren't going so well for a while, embrace the drawdown and make sure you don't miss the winning streak that's gonna come. And really understand that drawdowns are just natural in this business. Everyone has them. It's just normal, and you have to continue trading as before, knowing that the drawdown is nothing unusual and you're gonna make it out of it very soon. So thank you for watching. If you didn't do so, go ahead and check out www.algostrats.com, which is my new project that's going to go live soon. Also, if you would like to connect with me, you can do so on both Twitter and Facebook. And if you didn't subscribe to our YouTube channel yet, you can do so by clicking the subscribe button on the bottom right.